All right, cool. Thank you, Rob. All right, let's do a quick couple of housekeeping things here. The link, let me see. I think I've got a link here for you, and then I'll share my screen. The link for the offer, in case you don't have it, from Rob, and I know because I'm dyslexic, I make everybody kind of make things simple for me, is, oh, I've got so many slides today, so many slides. All right, where's it at? There we go. It's www.tradethemarkets.com/room.html. Has everybody got that? And I will try to send it here to everybody. And then just let me know that you can actually see it in the chat box, because I can't actually see what you see. Does everybody know where the chat box is? It's a little box that you can type questions in and ask us questions. All right, how is my audio? Are we good? The next thing I'm going to do is I'm going to share my screen. We're good. How have you guys enjoyed the first day and a half so far? Hopefully wonderful. I've got a little bit something. I really just don't know what to teach, so I'm just going to teach it all. And I do this a lot. Like, I always feel like anybody that comes to a webinar should get like a ton of value, especially if you're a member. Free people, you know, you give them bits and pieces just because they're free people, right? And you don't want to give away the store. So usually anything that's member related, I try my damnedest just to, you know, kill you with value. So first, I want to see what you guys were interested in learning. I've got a PDF too, so I know somebody's going to ask about the slides. How do I change presenter? Here you go, to me. And give me just a second here to update my screen. Hey, Rob, how do I do? Let me see. Change presenter. How do I kill your screen and show? Oh, here we go. I got it. These little buttons jumping right up my face, and I couldn't even see it. There we go. Now I'm going to share my screen. Perfect. Yes, screen 6. Okay, can you see my screen? Sorry, I'm just not that proficient with GoToWebinar yet. I've used it half a dozen times. I just forget where the buttons are. All right. Do you guys want to hear? So I don't have a lot of different skills. I'm only good at about 2 different things. One of them, building up businesses and marketing them. And I'm a pretty decent trader. All right. That's about the only skills I have. All right. Sad to say, but true. That's about all I'm good for. All right. I can either do trading psychology, personal development type stuff. I can tell you some stories about what has helped me. I can tell you how I got started in trading. I can also share with you a step-by-step trading setups of the ones that I use currently today in today's market environment. It's a lot of slides. What I did is I took the best stuff from a bunch of presentations, and I think it's about 130 slides worth. So, I mean, if I cover it, I'd have to cover it quick. So which one do you funny stories? Because I hear those are decent, or step-by-step trading setups. Or we can talk about the psychology head stuff. This trading psychology and head stuff, I think, is some of the most important stuff. But it's kind of weird from a marketing standpoint. You know you need it, you just don't want it. It's kind of weird, right? All right, so it looks like everybody's voting on the step-by-step trading plan. All right, so let me give you this PDF because you're going to want it. I mean, you're going to ask for it. All right, so if you're a member and if you're in this webinar, you should be a member. If you're not, you've luckily got a link that we sent out. Let me see here. I need to do this. Okay, and do this. And okay, send all. All right, can you see the link to the PDF? The link to the PDF is www.tradethemarkets.com/PDF. I'll give you a few seconds to go there and download that. All right, so that's the PDF. All right, so let's go. I'm going to give you a little bit of background just so everybody kind of knows where I'm coming from. I was born in the rural coal mines of Eastern Kentucky. Uh, I wouldn't say I was dirt poor, but I by no means was well off when I was born. Uh, Mother and father both factory workers, for American standard, and they did the best they could with what they had. So from there, I didn't have a whole lot of role models, but I just knew I didn't like the situation I was in. I was actually born and raised in Eastern Kentucky, in Paintsville, Kentucky, Johnson County, right on the West Virginia line there, Kentucky, West Virginia. Okay. So I didn't have a whole lot of role models to kind of figure out like how to be successful. I just knew I was not happy where I was at, and I wanted to be more, have more, and do more. All right, so I was always driven to want to be successful. I just didn't know how to do it. So about the only thing I could do is read a lot of books. It does require a member login. If you're not a member, I recommend you sign up for the 14-day trial. But yeah, it does require a member login. So from reading books and stuff, I started, trying to find the best possible stuff I could. So from about 17 to 19, I started reading a ton of books about how to be successful, this, that, and other thing. And some of the things would work, some of the things wouldn't work. And then I just figured out, all right, so if I want to do this, the best way to do anything is just copy somebody that's already successful. So I copied a lot of different people in businesses and stuff, went off to college, thought I wanted to be a veterinarian. And I put in 12 years doing that, and then just kind of in the middle of applying to vet school and working for all these veterinarians for this many years, doing apprenticeships and voluntary work and stuff like that, you do some really wild stuff. And I mean, I would have my arm stuck up a cow's rear end in the middle of winter while eating a cheeseburger. Real weird stuff. And I remember looking at the veterinarian at the time going, man, I love this stuff. And he goes, he asked me, like, why do you want to do this? And I'm like, well, because you don't have a boss. Nobody tells you what to do. And you guys make a ton of money. And he was like, dude, you have your arm up a cow's ass. It's 30 degrees outside, and we're having to eat through lunch. The only reason we're here is because this farmer is letting us come and do this, so he'll pay us some money to pregnancy check his cows. He's like, not only do I have one boss, I have, hundreds of bosses. All your customers are your bosses. He's like, plus I'm still paying off student loans. And I'm like, oh my God, you got to be kidding me. So I slung off they call it a sleeve. It's actually like a half a body condom that you put lube on in order to, penetrate a cow so you can see how far along she's developing. So from there, I told my wife that when we were in college, I was like, all right, if you'll support me for the next 2 or 3 years, let me start up some business. I know I can figure it out. I've read enough business books. I've interviewed enough business owners. I've had enough other small businesses. I could probably make $1 million in that amount of time. Now, 2 or 3 years to the date, she was like, okay, I'm done. My business was not doing $1 million at that point. And I was like, oh my God, what am I going to do? It was doing pretty good, but it was not making $1 million a year. So in the midst of that, I met a guy that had a chain of transmission shops. His name was David. And I was just doing good old middleman markup. Okay. Middleman markup is somebody lets you have something for $400 and you turn around and charge your client, more than $400. In this case, he was charging me $400 for a transmission, and then I was charging the client $800 to $1,200. If the link does not work, you can email support@tradethemarket.com. Is the link working for most people in here? Yep. The only thing I'm showing right now is step-by-step trading setups. Everybody voted that's what they would rather see. It's working, but it's extremely slow. It's a big PDF. Yeah. It's just slow because there's, close to 900 people trying to download the thing right now. Yeah. Yeah, everybody's trying to download it. Hey, Jeff, can we put it up on box.net? Or can we have Henry do that? Hold on, I'm trying to see another way. See if there's a cleaner way. All right, so Jeff is working on that. We'll see if we can get it on box.net thing, so it'll be a little bit faster and maybe handle the bandwidth a little bit better than Trade to Market server. All right, so from that, I was settling up on invoices with him, and he goes, come on back here. We'll sign these invoices, all this money you owe me, and you can watch me trade. I'm like, all right, I'll watch you trade. What are you trading? I had some experience in college, like investing in mutual funds, and I never really made any money with them. And then, so from there, he was showing me what he was trading in a little less than 18 minutes. The guy knocked out like $30,000, and I was like, holy shit, how did you do that? And can you teach me how? He's like, yeah. I was like, do you do it every day? He's like, I don't make money every day. I don't make that type of money every day, but I trade every day. I'm like, all right, lunch same time tomorrow. You cool? Me coming by? And he's like, yeah, sure. So a long story short, I ended up sitting on an upside down trash can for about 2 months before he looks at me and goes, I guess we're going to have to buy you a chair. I was like, dude, I'm never leaving until I suck all the information from your brain of how you're doing this. You're making more money than I'm making in my business. I want to do this. And I always had some kind of little fascination as being a trader when I was growing up anyway. I just didn't know how to find somebody that was successful at it and actually have them teach me. So I was in the right place at the right time. And I don't really believe in luck. I think we all have about the same amount of luck. And you have to really jump on the times and the places and the situations when luck does show itself. I'm a firm believer in the harder you work, the luckier you get, okay? So I was in the right place at the right time. And then I ended up taking a loan from this guy because I was running all my stuff through my business. I ended up letting a manager run one of my businesses into the ground before I had to build it back up, which was eventually bought out by Valvoline Corporation in the local area. And then they tried to do the same thing I was doing, and then they blew it up in 2 years, which was kind of weird. So from there, I started up, I took a loan and I scrounged up some more money. Then I took a $5,000 account and built it up. And then the first trade that I did, because I didn't do my first trade in my own account for about 18 months, almost 2 years. And I was like, I'm doing all his trades in his account. We're doing all this, 8,000 shares, 5,000 shares, 10,000 shares, and I'm making, tens of thousands of dollars, hundreds of thousands of dollars for him in his account. But I was kind of afraid to risk my own capital. So I scrounged some up. I took a $5,000 account and boom, first trade. So I'm gonna now do round numbers because it's easier for me to tell the story in round numbers. So I took a $10,000 account and boom, doubled it in one trade to like 20, 25,000. Okay. And I was like, this is easy. This is all paying off. I've been doing this for 2 years. I know what I'm doing. I'm the man. I just doubled my equity. I am the man. So the good old pat on the back trade. From there, the very next trade I did, I had a stop, and it was a GTC order, which means good till cancel, but which all brokers always know it means good till close. That's going to be your stop until it gets close, and then you're going to move it. And then that's going to be your stop, and that until price action gets close, and then you're going to move it again. So I did that 2 or 3 times. I had a cold sweat come over me, and I was like, oh my God, I took the 25,000. Now it's back down to about 12,000. Oh my God, now it's at 8,000. So I had to eventually liquidate the position so I didn't go below my initial equity curve, because that would just mean I failed, right, in my eyes. Went to the restroom. I was cleaning my hands. I don't know if you've ever been in mechanic shops or not. They're not the cleanest things in the world. I ended up losing my lunch because I was nauseous from the loss and the nauseous from the mechanic chemicals and also from a mechanic's restroom. So he comes in and he goes, what's wrong, Susie? Are you having a bad day? And I'm like, dude, yes, I'm having a bad day. This is bad. I'm destroyed. He's like, dude, get in there and build it back up. You know how to do it. So ever since then, I've been at this thing we call trading. All right. Now, he was running a little mini hedge fund, and he was about tapped out. So anytime anybody else brought money in, he'd go, I'm tapped out, man. I can't take your money. But my assistant there, he knows exactly what he's doing. Give it to him. He'll take care of you. So we took a $25,000 investment and built it up to about $868,416 in 18 months. And then before I took my first 25% drawdown. Okay. So that's my story. That's how I got started in trading. I don't trade as many stocks as I used to. That's how we used to. And everybody's always asking me, like, does he still trade? Yes, he still trades. He taught me some really good concepts on reading price action and reading the tape. A couple of bad habits that he taught me was all in, all out. Use all the possible margin you have, load the boat, risk it all. So those are some of the bad things. But I'm not going to take anything away from the guy. He definitely taught me a skill set that's invaluable, which is reading the tape and the price action and how to interpret that. Okay. So from there, I started into the futures business, and now let's talk about a step-by-step trading plan that's working for me now. And I want to share that with you. I'm going to give you entry rules, stops, and targets, along with all this stuff, if I can figure out how to work PowerPoint. All right. The system was designed so that the system was not designed so that most people could beat it. Most traders take a perfectly good system and destroy it by trying to make it a perfect system. So if any of that resonates with you, just give me a visual yes. Type in yes. Do you tend to take a trading system or a setup and want to eat it up until there's no possible way that you get stopped out? I think it's one of the worst things that you could possibly do, so just be careful with it. All right? So welcome to trading. You have a 9% chance of making any money while you're trading. That's the bad news. The good news is most people blow out their accounts in a little less than 3 months. Okay? So the good news is the bad news is it's going to be painful and it's going to suck. The good news is it's not going to be painful and suck for very long, and then it's going to be over with. Most people blow out 3 accounts before they figure out how to do this professionally. I was lucky enough not to blow out an account yet. I've took 25% drawdowns. I've took 50% drawdowns. I've only took 1 or 2 50% drawdowns. All the rest of them has been about 25%. I'm not saying it'll never happen. The odds say that it will happen. So the best thing that you can do to kind of protect yourself from that is have daily loss limits, use stops, stuff like that. So any trade that you put on, I highly recommend that you use stops, okay? It's just a smart thing to do to protect yourself from yourself. It sucks being stopped out, but as long as you're making more money than you're losing, you'll come out net ahead, all right? So here's some of the things that professionals traders do that we do to kind of differentiate ourselves from retail traders or for people that are not pros yet, all right? And I'm not saying any of us are perfect. We all jack this up from time to time. We know it's a numbers game. We don't take tips. We don't listen to others. We do our own thing. So let me discuss some of these things. So in numbers games, I know that on some of my setups, they only work 35% of the time, sometimes 45% of the time. And I know I only need to be right one out of 3 times or 1 out of 4 times out of that trade in order for it to make money. The percentage sucks, but the P&L works, all right? We don't take tips. I don't really care if somebody thinks they know an inside tip at Google or not. I'm a technical trader. We don't listen to others. Believe it or not, Rob does not listen to me and John do not listen to Rob about what they're doing. Now, I'm not saying that we don't notice what they're doing, but I mean, we don't take advice openly from other people unless we know that they have the goods. Now, that does not mean that we don't learn from each other. What we do is we end up going to other professional traders and going, hey, man, I hear you have a really good skill. Would you mind teaching it to me? Some of them will do it for free. Most of them charge you for it or charge you for their time. We do our own thing. We're our own person. It's just like we do our own thing. We all trade slightly different. Even though we can all think that the indexes may be going higher or gold's going higher, we trade it differently, okay? The best thing I can tell you is we're responsible for ourselves. We take advantage of producing a P&L and producing that for ourselves. We don't let somebody else do that unless we've got some of our money in systems, all right? So you want to be self-sufficient. And I'm talking to anybody that's interested in going pro. And I think that's what you're interested in doing. I think you're interested in going pro, taking responsibility for you are the one clicking your mouse in order to either make money or lose money, okay? If you're not in that position where you're willing to take the responsibility and willing to take control of your own destiny, then all we're going to be for you then is a signal service. And if one of us, if you're using us as a signal service and you're not trying to learn for other successful traders, heads up, when we die, and I don't know anybody out there in the world that has got out of this game alive, you will be hosed. Okay? So it's not really a trading plan just to shadow us. Okay? If you want to trade on your own and be your own person, you know, and be able to fight on your own 2 feet, I recommend that you try to learn and soak up as much as you can from other successful people and other successful traders. It's the same difference. Like you hear a lot of people say, you know, those who can do and those who can't teach. I think it's kind of a misnomer. I think part of that's true and part of it's not true. Part of it's true in this vein where if you go to a traditional educational system, a college, and someone tries to teach you about business, if you ask the professor, like, hey, have you ever had to make $1 million in payroll a month? And his answer is no, then you go, oh, your advice means nothing. And until someone's actually had to make a payroll for other people that depend upon their livelihoods based upon around you as a business, then they don't really know what they're doing. Same thing with trading. Oh, have you ever made any money trading? Oh, no, I have not. Okay, don't listen to you. Oh, have you ever had to support yourself with your trading capital? Yes. Okay, how did you do that? All right. The hard thing in the trading business is, now there's 2 different businesses that trade the markets. There's actually 3. There's the we trade our own capital. John, Hubert, and Rob, we trade our own funds. All right. We don't usually take money from trade the markets and fund those accounts. Those are accounts from our own personal income. Okay. I'm not saying that we never do that. I'm just saying it's not the usual thing. All right. Same thing with politicians. I think they should have term limits. You should be able to run for 2 terms, and then you should be forced out of there. It's like politicians have never had to make a payroll, but they're trying to figure out how to balance the deficit. That's kind of funny. So that's one business, our physical trading accounts. Okay. Second business is the educational business, which is what we're doing right now. We're charging you money to learn from us by what we're doing. Now, a lot of times you'll get a lot of people question that, like, why are you doing that? 2 reasons. One, it just makes good old common sense. People helped us, and we're trying to help you. Now, we're not doing it out of the kindness of our heart. This is not a nonprofit organization. This is a business. So we're charging you money, but the whole thing is we're trying to give you way more value than what we're charging you in money. Does that make sense? Second thing is, it's a risk-free trade for us. If I want to make $1 million, I have to risk $1 million. In the educational business, if I want to make $1 million, I don't necessarily have to risk $1 million. So does everybody understand? Now, we've got the other portion of our business that we just launched, which is the done-for-you letter of direction. I'm going to call it the brokerage business. Okay. Let me see here. Log out and back in. Just let me know if you guys have sound. There's a few people just saying on here that they don't have sound. Can somebody from my team grab the questions where they say they don't have sound? Okay. All right. So does everybody understand the 3 models, the 3 business models Trade the Markets has, and how we do that? All right. So let's go through Trade the Markets business plan real quick, and then I'm going to go through these trade setups. All Trade the Markets business plan is this. We try to get people on the free video newsletters that we send out to everybody. That database is about 70,000 strong, okay? Once we get you on there, we try to build up a relationship with you and show you this is what we do, good, bad, or indifferent. For every 10 emails that we send to the free list, we try to make 7 of them really good content and 3 of them are offers. Sometimes that gets switched around if we have a really thick, busy marketing calendar, okay? All right. That's it. I can tell you that after you're using on that database for 3 to 4 months, most people buy something from us. So that's the whole business model in a nutshell from a marketing standpoint. From a trading standpoint, let's talk about some of the trade setups that we personally use to kind of extract money from the markets. And that's what we're going to spend the rest of the day talking about. I just wanted to give you a quick background of who I am, what I do. And I also wanted to give you a quick background of, all the different business models we have at Trade the Markets. Now, we also have several other businesses, whether it be internet, newsletters, and all that other stuff, all right? So I just want to make sure I'm completely transparent with you and tell you how everything works. If you have any questions whatsoever, no matter how personal or over the top you think they are, you can ask them. You have about a 99.9% chance that I will answer them. I just really don't have that much to hide. I don't drive a Ferrari or a Lamborghini. I also don't have a whole lot of debt. I've got 3 kids. I've been married for 20 years. I drive a Suburban and a minivan. All right. All right. We have a plan and we stick to it like our life depends upon it because it does. All right. Now, here's the key. I'm not saying that I never deviate from my trading plan. I do, but I try to get back to it as quickly as possible after I get off of it. It's like a flight to Hawaii. If you take off from California and you're trying to fly to Hawaii, that airplane is off pretty much the whole time. It's not dead on, to the degree to it's going to Hawaii. It's off 2 or 3 degrees, and it's making minor adjustments. So that's what we're talking about. We take it serious. It's not a hobby. We're not doing this for fun. We're doing it for profit, our trading and our business both. It's a real business. Our entire goal is to extract money from the markets. If we can't still do that and then we continue to teach, then we're going to lose our edge. What we found is usually the more we teach, the more money we make in the markets because it reinforces what we need to be doing in the markets. All right.
Hey,
all right. Biggest lie on Wall Street. You will never go broke taking a profit. One of the biggest lies. How many people in here do this? Just give me a visual yes. Little itty bitty profit, little itty bitty profit, little itty bitty profit. Oh my God, I got some money. I got to take it off the table. I have some money. I got to take it off the table. And then boom, big old stop loss, right? So this sounds really simple and common sense. Just switch that. Just switch that. All you got to do is switch that. I'm sorry. What is it? Rob, did you have something? Sorry, man. I didn't have my headphones on.
Yeah, Hubert, I'm sorry. Can you hear me now?
Yep.
I'm sorry. The office is getting the same question over and over again and getting a little bit overloaded with that. So I figured we'd step in and answer real quick. Several people called in or emailed into that link asking the gang if they could go ahead and sign up now, join the live trading room now, get the videos and stuff, but start a couple weeks, I guess. Well, even like you've got a family vacation coming up in a week and a half. I guess a lot of people got family vacation still over the next couple of weeks. So asking if they could delay the membership. The short answer is yes, gang. So just when you sign up, go ahead and call them and tell them, how long that's going to be, whether it's a week or 1st of September. I think the one person was 1st of September. A couple people were middle of August, stuff like that. So the short answer is yes, gang, and looking forward to having you. So yeah, instead of asking the office at this point, because we get kind of inundated with that one, you're welcome to go ahead and sign up and tell them what start date you'd like, and they'll take good care of you. So sorry, Hubert, they were getting kind of overloaded with that one.
No worries. M. Patel, there are slides. If you do not see them, log out and log back in. All right, so one of the biggest lies on Wall Street, you'll never go broke taking a profit. If you're always taking small profits and taking big losses, it just hurts. So what you want to do is take small little losses and ride those winners forever, all right, as long as you possibly can. All right, the next slide. Here's a biggie right here. You're going to have to check your ego at the door. If you do not check your ego at the door, it is going to rip your damn head off and crap down your throat and bend you over and hurt you. Does everybody understand? It's just, here's how it works. The smarter you think you are, the more money you're going to lose, guaranteed. That's about the only guarantee I can give you. The less you think, the more you'll make. In other words, the less you have to think about the stuff that you're doing, the more money that you're going to make. Now, it does take some experience to get to that point, but it's the better place to be. All right, strange but true. There's an article, you can Google it based upon this, I just think this is a funny little story, so I like to tell it. Okay. Yeah, so if anybody wants to write that down, smarter you are, yeah. The more you know, all right, I've skipped a slide. The smarter you are, think you are, the more money you'll lose. The less you think, the more you make. There's two groups of people right here that kind of are hard to teach. And I know there's a lot of doctors in here, and I know there's a lot of engineers. I'm not trying to bash you. I love you guys. I understand where you're coming from. Doctors and engineers have a hard time learning how to be proficient at trading, because as a doctor, you've been taught, make the wrong decision, I die. Make the wrong decision, someone else dies. So they don't like being wrong. Engineers want everything to be perfect. The load tolerance on this must be ... So you're going to have to overcome that a little bit more often, okay? So I'm just giving you a heads up on that. The hardest people that I have to usually try to teach how to trade are doctors and engineers. Now, I'm not saying that you don't find individuals that are easier to teach. I'm just talking as a big group, okay? All right. The more you know, the less you need. The more you know, the less you need. The more information and the more experience you have trading, the less garbage that you need to actually trade. You should be able to get to a point where you could just trade off a pure price action alone. The less you need, the more you'll make. The less information you need to make an informed decision, the more money you're going to make trading. All right. Strange but true. Place your hands flat on your desk. And as I'm talking to you right now, I've got my desk elevated and I'm walking on a treadmill. Right now I'm doing about 1.5 miles an hour, so I may eventually get out of breath. Lay your fingers flat, palms down. If your ring finger is longer than your index finger is your pointy finger, not the one that you communicate in traffic with when somebody cuts you off. If your ring finger is longer than your pointy finger, you may have what it takes to be a professional trader. Left or right hand, hopefully they both match, unless you just got something wrong with your DNA. But maybe they're different. I mean, mine are both about the same. My ring finger is substantially longer than my pointy finger. And it was just a study that they did based upon people that are more adrenaline junkies, like to take risks and stuff like that. You can look up the article. It's on Google. So just look for ring finger, index finger, trader study. What does it have to do with? It's got to do something with your DNA and risk and stuff. That's supposed to indicate testosterone received in the womb is what it's supposed to be. Isn't everyone's ring finger longer? No, it is not. All right, now this does not hurt either. If you make sure, I like to call it squirrel brain or lizard brain. Try just not to think too much. I mean, if you start thinking too much, then you start rationalizing. I guess it probably helps too if you have intestinal fortitude or if you have big cojones. All right. It does take some balls to do this business. If you're a female, it still applies. You still have to have balls to do this. We're risking money to make money. All right. Now, remember what I was talking about earlier in a few slides when we were talking about the success rate of traders is only about 9%. It's about the same thing for small business owners. Most small business owners fail within 3 years. Here's the way I look at it. Most people that try to trade, the vast majority of them, they have no business trying to trade in the first damn place. It's the same thing with business owners. The vast majority of people that start up a business because they have a hobby and they're like, "Ooh, I'm really good at basket weaving. I'm going to start a basket weaving business." But they don't know how to run a business, and then it fails, or woodchucking or whatever you're doing, or cabinet building. Have you ever had a contractor work for you and he's really good at what he does, but you're like, "Man, you just need somebody to run your business because you have no idea how to run one." So it's the same type of thing. That's the reason I think that the success rate is so low in business and in trading. All right. Homework and market research. I like to keep them separate. Swing trading from intraday trading. One is high risk, low yield, and one is low risk, high yield. Okay. So day trading would be considered high turnover, low return. All right. Swing trading would be high return, or I'm trying to think of it as a real estate term. Day trading is for cash flow. Swing trading is for wealth generation. Does that make sense? I think you need a mix of both. It's usually easier to take someone that's a successful swing trader and teach them how to day trade, as opposed to taking a day trader and teach them how to swing trade. Okay. I think you're going to make more money swing trading than you will intraday trading, just because of the sheer magnitude of its difficulty. Okay. All right. All right. No preconceived notions. This is a toughie. You should never come into the market with a preconceived notion unless you're swing trading. So how do you keep this daggone thing separate? You basically have to become, all right, this is my swing trade account. This is a business over here. This is my intraday account. This is a separate business. They're two separate businesses. Keep them separate. The only way that you could commingle them is if you had, let's say I'm net long gold and I'm trading around that physical position intraday. Does that make sense? Okay. If you come into a preconceived market, it will kill your decisions, it'll kill your performance, and it'll kill your P&L. Question is, why is swing trading so much easier to teach than swing? Why is day trading harder to teach than swing trading? It's just because it's so much faster, and you have the time compression going for you. If you don't see anything on the screen, just log out and log back in, and you should see that. Yeah, it's timing. It's a timing issue, and it's also the number of frequency. The more often you trade, the higher increase that you have the risk of ruin. So I know if I trade intraday more than 15 times, my P&L usually starts going negative. So I try not to trade more than 15 times. It also comes to do down with like willpower. You only have so much willpower. I know if I don't get up in the morning and focus the first 2 hours on projects that I need to do, they just won't get done. It's the same thing with trading. You can only focus really hardcore for about 2 hours. And then after that, you're spent. So you got a lot of factors working against you. I'm not saying it's impossible. I'm just saying it's harder. All right. Two news places that you can use. You can use Econoday, ECONDAY. You can also use DailyFX/calendar. You also use Forex Factory. Now, I recommend that you go on a news diet for the next 30 days. I think it'll change your life. You'll also be a little bit more positive. Who hates watching the news? I don't even watch the news. Hell, I don't even watch the weather. Sometimes I don't even come out of the back cave a lot of times, or the trading lab. Who hates watching the news? It's always talking about someone robbed somebody, somebody killed somebody, all that good stuff. The economy's in the crapper as the market continues to go higher. It's just so negative. And so what that does is that taints. That's like a little poison or a little cancer in your brain, that the economy's in the shitter. Just remember that. The economy's in the shitter. What are you going to do the next time you're trading? Man, this is a short. I got to short this. Why? Well, the economy's in the shitter. Everything should be going down, right? So I know you may think it may not get into your brain and act as a cancer, but it really, really does. So just go on a news diet. Go on a news diet. Don't listen to any news. Don't listen to CNBC, Bloomberg, none of that stuff. Just trade your plan, design your trading plan, and then plan your trades out, and then trade that plan. Okay? When people go, hey, did you hear about the crisis in the Middle East? And you're like, what are you talking about? I have no clue. Crisis in the Middle East? What's that about? All right. Never test the depth of a river with both feet. Warren Buffett. Thing on risk, right? So if you're going into a position, you don't always have to go all in. You could scale into a winning position. Okay? I never like to add to a losing position. I always like to add to a winning position. But I can say, all right, if I've got a predetermined plan, say, look, I like this level and I like this level, I'm going to break it up into 2 units because I'm not sure where it's going to go. This is the stop on the first unit. This is the stop on the second unit. And I'm going to add 2 as I'm going higher. Somebody said, I did that for decades. I didn't know anything that was going on all day long. I think it's a wonderful way to do it. All right, gaps. All right, now we're going to actually get into the trading plan. Now, I'm going to have to fly on this information. This is being recorded. Try to hold your questions to the end. I'll do my best to explain them as we go, okay? If you bog me down with questions in the middle of it, I'll be here for 3 hours, which won't work for me because my wife and kids will want to kill me because at noon I'm supposed to take them to the lake because we're supposed to be going wakeboarding again, all right? So I'm going to try to get out of here by 11:30 or 12. So I'm going to try to fly through this information. Just because I go fast does not mean there's not value. It's going to be packed. First thing, this is my step-by-step trading plan. First thing I look for is gaps, long, short, or flat. Questions I ask myself, is there a gap? If so, is it up or down? What day of month is it? Is it the first day of the month or the last day of the month? Is it after OEX or before OEX? What day of the week is it? How big is the gap? And what is the color of the TTM trend on a 50-tick chart? All right. So the first thing I set up on my charting system is I set up at ym.d, or you can do a custom session. You want it to be a 9:30 open and a 4:15 close. 9:30 open and a 4:15 close. All this gap data was taken years ago, but it's still very accurate today. The percentages slightly changed, but overall they're still really good. All right, Monday's gap fills 65% of the time. Tuesday's gap 77% of the time. Wednesday 79. Thursday 82. Friday 78. What this means, are you using TradeStation for these symbols? At ym.d. Yeah, I'm using TradeStation. At ym.d. What this means is the market's gap down on those days. It has until 4:15 to close, all right? So let's be crystal clear on this. If the market gaps down 200 points and then goes lower 400 points, but by 4:15 closes the gap and finishes, closes that gap, that's still a gap fill. Same thing. If it gaps down 20 points, goes down 100, and then finishes up more than the previous close, that's a gap fill, okay? All right, here are your percentages for the S&P. In the S&P, you can also do it for the Dow. Every 1 point is about 10 points on the Dow. I don't have them for the NASDAQ and the Russell. You'll have to kind of, mess with those. 1 point, 93%. 2 points, 90%. 3 points, 82. Look here, it drops off the cliff once you get above 70 points. So I teach retail traders that are not interested in going pro not to mess with anything above 60 or 70 points. For somebody that's wanting to go pro, then what I do is I say, look, trade every single one of them because that's what I do, regardless of the size. As long as you have a stop loss, it does not really matter. Okay? All right. Here is a landmine map to tell you which days to trade it and which days not to trade it. Are points handles? Yes, a point would be a 1 point in the S&P or 10 points in the Dow. Yes, a point would be a handle. Landmine or landmine? I like mines, landmines, because you have to be conscious of what they're going on. All right? Landmines. Keep these in your head. That's also because I'm dyslexic and I can't spell. But thanks for beating up on me. I appreciate it. Spelling Nazis. Love them. All right. So OEX day, it drops 2% from 78 to 76. Not bad. Monday after options expiration, it drops 13% from 65 to 52. All right. So that one drops pretty drastically. So you be careful on that one. Rollover Thursday, not a big deal, but Friday after rollover, be careful. Okay. The first session of the month, leave it alone. The last session of the month, never miss it. The best trade that you could possibly do is a half a gap fill. All right. It's my favorite trade to do. I want you out of either half or 3/4 of your position by the time you get to a half a gap fill. All right. Here's how we enter these bad boys right here. We're going to use a 50 tick is what I currently use. You can use a 1 minute, a 2 minute, or 100 tick. I use a 50. I don't really think it matters what you use, but this is what I use. If we gap down on the Dow, and this should be a 50 tick chart. These are old slides, but it's still same information. All right. If we gap down on the Dow, I'll wait for 2 blue TTMs on a 50 tick chart. Okay. 2 blue TTMs on a 50-tick chart. That's where I go long. But if it gaps up, I wait for 2 red TTMs. That's where I go short. There's 3 options. If it's a professional gap and it's up and it's all blue, I could go with it, but I would rather fade those. I would rather short a gap up and buy a gap down. All righty, let me see here. Copy link location. Here is, if you could not, they're giving me stuff you can do here. Hold on. Here is the link for the slides if you couldn't get them. I just sent the link to you guys. Do you market or join bid ask? I just go market. All right, so here's the trade setup on this. Now you're probably going to ask yourself, all right, what are those red and blue bars? They're just TTM trend. TTM just stands for trade the markets, because I don't want to say it all day long. Trade the markets trend, which is our version of a Heikinashi. On the left, you have the candlesticks. On the right, you have the TTM trend. Notice how much easier it is to read the trend, the TTM trend. It's really easy. All this thing is doing is it's calculating 6 bars back, and it's going 1, 2, 3, 4, 5, 6, and it means standing balanced on 1 foot, okay? Standing balanced on 1 foot. So if you get an average true range above the 50% of the previous 6 bars, then the color is going to change. All right? Does everybody understand the math behind it? That's all this indicator is doing. Here's the code. If you need the code, it's in your slides. We also sell it on Trade the Markets, I think, for $300 or $400. Gap rules. If it's less than 60 or 70 points, fade it. If it's a gap down, buy it. If it's a gap up, short it. All right. Place a 20-point stop loss, and you're going to scale out every half, quarter. I use at least 4 contracts when I do this. If you can't afford to trade 4 contracts, trade less. If you can afford to trade more, trade more. Okay? The targets are plus 10, plus 20. Right now, the best equity curve is plus 40, but usually on my half, quarter, I go plus 10, plus 20, and open target on the last quarter that's either a gap fill or a close on that market. Okay? It will work on the NASDAQ and the Russell, the S&P and the Dow. It's specifically designed for the S&P and Dow, but it will work on the other markets too. So here's how I actually do this. Let me see if I can draw on this chart with my handy-dandy drawing board here. Now, I'm not a real good PowerPoint guy, so let me see if I can do this. If I go into the market, let's say it's a gap down, okay? So we're gapping down right here. This was the previous close. Does everybody understand that? We're gapping down here. Then what I'm going to do is I'm going to go in right here. Entry. All right. I'm going to use a minus 20-point stop loss. And as soon as I'm up plus 10, I'm going to cut half of my position loose. Then my software will automatically move my stop from minus 20 to minus 10. All right. It moves it. I never move it after that. Then if I make another 20 points, so it'll be plus 20, I'd cut a quarter loose. On my last quarter, this is a runner. I'm either going for a full gap close or the end of the day. And if I have enough cushion, I'll hold that sucker for several days. So I'm taking a winner that has cushion home at night. I'm not taking a loser home at night. Does everybody understand the entry tactics and rules for gaps? Quick questions real quick. You got questions on the gap? If not, I'm going to keep on moving. We're on slide 29. We got 100 more to go. No questions. Sweet. Love you guys. All right, TTM rotation. There's also another trade that you can do. First, you're going to find the major trend of the market. The order is placed as soon as the market opens. That's correct. How do you get a moving trailing stop? Your broker can use it. I use Infinity, and they just do it automatically. TradeStation will also do it. Which market are you talking about? A 60 or 70 point gaps? I'm talking about the Dow Mini. Do you still look at pre-market volume for the gap fill? No, I do not. I've never looked at that. That's always been Carter. Has the increased overnight action affected the success of this strategy? No, not really. I mean, it's still pretty good. I mean, the percentages still hold up. They're skewed a little bit, and they'll also be skewed based upon whether the market's going up or down on the way the gap's filling, but overall they still work. Why not move your stop to break even on the last runner? Slow timer. Lance, I just don't. I mean, for me, I like to give it enough room, and I have no problem. If I'm already out of 3/4 of the trade, still risking 10 points. That does not bother me. There's nothing wrong with it. I just don't do it. What is the range to fade on stocks? Hand that's going to be totally independent. I have a program that'll actually calculate that for every stock. What's the best way? What are the best gap up and gap down numbers for each stock? But I don't really trade gaps on stocks anymore. Did it work today? You didn't really have a gap today, really. It's just too small. I mean, you didn't really have a gap today to play with. It opened pretty much up where it closed, so there wasn't no gap today. All right, TTM rotate off the topic. How long did it take you to consistently be profitable? I would say it took 3 to 5 years. 3 to 5 years, depending on what you consider consistent profitable. Now, on the Dow, I want the gap to be at least 10 to 15 points. If we don't have at least a 10 or 15 gap up or down in the Dow, I usually don't like to mess with it. If pre-market TTMs are red and the gap is up, you want to go down. Do you wait after 9:30 to see if the TTMs are red or blue? At 9:30 is when I do it. And I have the at YM 50 tick chart set to 24 hours. So immediately at the open, I know what I'm doing. How much of a stop on the YM? It's in the rules. It's a 20-point stop loss. It's in this slide right here. Okay. There it is. Place to stop. 20-point stop loss. All right, everybody ready to move on? We're moving. All right, TTM trend. You can also use this indicator to do TTM trend rotation. So after I get done with the gap, the second trade that I like to do is TTM trend rotations. You're looking for the overall major trend, and you're going to let two color changes change. You're going to go let the second color change back, and then get in on the rechange. That sounds complicated, right? If you have blue, let red show up, and then when you have two blues, go long. If you have red, let blue show up, and then when you have two reds, go short. So let me show you what this means. If you are lucky enough to be short up here, what you would do is you would cover on these two blues. If you were not lucky enough to be in that move, you know overall that looks like a downtrend, right? If it's not super clear to you that that's a downtrend, I don't want you to do it. If it's mixed,